Hello and welcome to this week's edition of Murphy's Market Minute with Elliot Omenson.
And Nathaniel Vossman.
It's been a pretty good week, wouldn't you say?
I would say so. If you look at the markets,
Yeah, right. All new highs again. I feel like we're kind of on repeat since April.
Yeah, I feel like, and I think even the Russell 2000 hit an all-time high for the first time in years.
Yes, yeah.
So, things are rolling.
Yeah, Russell 2000 is performing well. It's showing signs of strength relative to larger caps, right?
We don't talk about them too much, but still notable.
So yeah, and why is it notable? What's unique and special about the Russell 2000? You should hear it right in the name of it.
I mean, just
So the Dow's 30 blue chip companies.
It's just more stocks that make up a lot smaller market cap, and
Yeah, so it's like a broader market participation is what's happening with investments, right?
yeah, and a lot of those companies are less quality than something like an SP 500 or NASDAQ or Dow. And so that's kind of the reasoning why it's been so long since the all-time high. It's like the earnings growth really isn't as strong there, but I think with the easing rate cuts, that's what's kind of going to drive that even higher from here.
Yeah. And who just hit 3 trillion? Was it Google?
Yeah.
Google hit 3 trillion. Tesla's gained 80-something% since its low this year. I think it's at like 73 for the year because it took a hit in the beginning of the year.
Yep.
So one of the major things driving that, right? The Fed finally did what it probably should have done a while ago. And they cut interest rates by a quarter point and announced that they're probably going to cut them at least one more time, you think?
Yeah, I'm thinking it sounds like it's going to be probably 2 more times this year, so October, December, and then looking at potentially another rate cut sometime next year.
Yeah.
And we'll see from there. That's just kind of, I think, the consensus right now.
Inflation seems to be moderating, right?
Yep.
At least certain sectors more than others. Certain things were softening, like home building, consumer demand, and the job market. But I think interest rates being cut should help with home building.
Yeah, you would think, especially as we continue to cut. I think, just one cut's not going to have a big impact, but you get 2, 3, 4 more, and get rates at a more or less restrictive level. I think, yeah, definitely.
Yeah. So I do have something a little interesting, a little more in depth than I normally go into to talk about. But before I get into that, do you got anything that you want to highlight or hit on?
No, I think the Fed was just the big thing this week, and then kind of their tone going forward, which kind of indicates those future rate cuts that we talked about.
Yeah. So one of the things I'm always looking for, like oddities, right? In the financial business, they have things like leading indicators, right? And one of the best examples of that in recent memory for me would have been COVID, and it was container spot pricing, right? So shipping containers are a traded commodity. The value of them goes up and down depending on need, right? The price to fill one with your goods and ship it. And so we watched container spot pricing plummet. There would be, because we weren't shipping goods, so actually at the time I had a client who managed China for one of the largest food companies in the world. And so I was kind of getting, it's not really insider information, but information few people have access to, because I had a source in China that was explaining to me what was going on at the factories and the rail yards and the shipping ports and all that kind of stuff, right? And then I could back that anecdotal information up with container spot price and what was happening there. And it's a leading indicator, so then, you saw this dramatic decrease in goods inside the United States. And then that with the government printing up money, you have massive inflation, right? So there is something really interesting going on right now. And it's basically, in the beginning of the year, because of the tariffs, there was like this mentality of sell America, right? But this article talks about how the real mantra from global investors is more like hedge America, right? they're still snapping up U.S. stocks and bonds, but they're doing so while buying derivatives that protect those investments against any further declines in the dollar. Now, one thing that I think is really interesting about this, so this is the first time in decades flows into dollar-hedged exchange-traded funds have outpaced that into unhedged funds. And they're looking at about $1 trillion having been moved into those. So 30 trillion of the markets are all comprised of foreign investors, which is a pretty good chunk of money. And so the dollar right now is teetering around its weakest level since 2022. So, I mean, I wouldn't say that's that big of a deal. But what's really interesting to me is the analyst, I can't probably pronounce his name, Matani, not the guy running for mayor in New York. By his estimate, the wave of fresh dollar hedging could ultimately tally about $1 trillion. This would, he says, merely bring hedging levels from global investors who own more than 30 trillion of U.S. equities and bonds back to where they stood last decade. So that's one of the interesting things that I find a lot of times about the more you read into a lot of this information that's going on. It's always interesting to me, like there's always like the headline, the clickbait headline. But then if you read back into it, you see, well, it's actually not. We're just reverting back to a previous stabilized point. With the container spot pricing, the article was the value plummeted, or actually I think later it was that it had skyrocketed. But all it did is went back to pre-COVID pandemic levels. Well, I don't know that the extreme title there really made a lot of sense. And the same thing here when they're talking about there's this, hedge America. Well, if we're just returning back to what it was to a previous decade's levels, is it really a big deal?
Yeah.
Right.
Yeah. Cause I see the same thing with cause I read people online talk about the strength of the dollar, for example.
Yeah.
And how it's down. But then you look at a chart, like right now I got a chart pulled up that goes all the way back to 1986, and we're like above average for the strength in the dollar over the last 40 years.
Yeah.
And you got people complaining about the dollar being weak. And
yeah.
It's like, well, we're much stronger than average right now.
Yeah, yeah, right. And another good example of that is to be honest, interest rates. We got so used to post 9/11 or post 08. I guess that would have been really where the interest rates dropped. But we got so used to these insanely low interest rates that when they go to 5 or 6%, everybody freaks out and stops buying houses.
Yep.
Well, 5 or 6% historically is a fantastic interest rate.
Yeah, because like on that episode Backseat Ballers, you were talking to Martin Taggart, and I remember there's like a clip in there where he's talking about, I think he's got a mortgage. I forget when it was, but he said he was paying like 13% or something.
Yeah.
And he's like, we didn't think anything about it.
No.
That's like double.
Yeah, but you get comfortable, you get used to something, especially when it's persisted for 10 years. It's amazing that there's the short-term memory, right, that like a society has, right? So, I don't think, do we have any updates to is the jobless still 4.3?
Yeah, I think the unemployment rate's steady there, and then
inflation's 2.7.
Yeah, 2.7. I think next week we get the PCE numbers for the previous month, and so we'll see where those land. I know like the jobless claims this week were less than expected because last week was a pretty far above expected.
Yeah.
So
yeah. And so I did have a comment on talking about tariffs last time. Somebody wanted me to make sure to point out that, obviously a court has ruled all these tariffs bunk, right? And now it's being appealed to the U.S. Supreme Court. So it'll be interesting to see what the Supreme Court does in regards to the tariffs as to whether or not they let them stand or not. Any predictions?
Well, my main prediction is that there's still going to be some form of tariffs, and so they might be different than what they are now, but they're not going away. But I would imagine though that this is certainly like the highest level they'll really ever be.
Yeah.
So it's only down from here, but they're not going away.
Yeah.
So
Yeah. And I personally, just my personal opinion, is whether they go away or not, they've been a very effective cudgel in forming a lot of these trade agreements and getting this investment capital from countries. England, Japan, I mean, a number of countries have, committed to invest. I mean, like large sum. I think 2 different countries committed to invest over $500 billion into the United States.
Yeah, and I think the most interesting part about that, because like I said, the tariffs won't go away; they might change. But if some of the tariffs are knocked down, that tariff revenue would be returned and basically dumped back into the economy. So that'd be interesting. I'd say.
Yeah, it will be interesting to see how all that works out. So for this week, we've had a lot of people choose to make use of the new 8% account that we made available. We're going to be doing a lot of tax planning this last quarter of the year because we now have the ability for people who are making use of that 8% account to be able to harvest tax deductions, to be able to offset their taxes, lower their taxes. So that program is going to be rolling out. We also are going to be rolling out a new client portal to all the clients. And we're going to be, for all of our clients who participate in the monthly fee, we're rolling out new programs for all your estate planning work. And it's going to cover, if you don't have a trust, a will, powers of attorney, medical directives, and all that kind of stuff, you're going to be able to now get it all. It doesn't matter where in America you live. We're rolling out a program. It's going to be provided to any state in America. If you already have it, but it's been years since you've updated it, you're going to be able to upload all that. It's going to all be reviewed, suggestions on what needs to be done to update it and bring it all up to current laws and stuff like that will be made, and then all that can be done for you as well. So we're rolling that out. And the biggest one, I probably shouldn't mention yet, but I'm pretty confident that we're going to be able to do it as well, is I think we're going to roll out a really phenomenal tax program as well for everybody to get your taxes and your tax returns done in a timely and efficient manner. So lots of things coming down the pipeline in the next couple months, which I'm really excited about. So anyways.
And then one last thing, maybe we can clip it and put it at the beginning of the episode. I know you were trying to get some more Google reviews.
Yes, thank you. So if I think we got 20, 30 Google reviews right now.
Yeah, I think we're
15? Just
over 20 at this point.
Just over 20.
We should be much higher.
Yeah. It would be really, really awesome if anybody that appreciates what we do would be willing to go leave us a Google review. We're going to put into the email that sends this video out a link to make it easy for you. So anyways, I'm going to thank you all in advance for that. Thank you, Nathaniel, for reminding me. I do a really bad job of asking for that for some reason. So, and if there's anything going on that you guys hear about or whatever that you would like us to talk about in Murphy's Market Minute, feel free to email us with that. And really any kind of suggestion, to be honest. So we always want to be improving and making things better for all of you, our clients. So anyways, until next week, this is Elliot.
Nathaniel.
Signing off.